Welcome back. Not much respite at all from the markets. 4% a piece down for the Sensex and the Nifty. Mid caps are getting there. 3.5% off that index, and the small caps of 3%. That really hides a lot of individual losers, in particular the banking shares, which have really taken it on the chin today. Already a badgered lot, and today their lot is particularly pathetic. 7% lobbed off from the BankX, including good stocks like Axis Bank, which had come in with good results. So as a sector, you're seeing financials being gotten rid of by the markets, by the droves. And of course, the other big fall has been in Ranbaxy for obvious reasons. More experts join us. We have Sanjeev Agarwal with us. Mehraboon Irani of Centrum Broking also joins us now for a fundamental check, as does Rajat Bose of rajatbose.com. Thanks, gentlemen, for joining. Rajat, well, everyone would now look for some technical succor. Where are you expecting that support to come? The old level of 3848 or 3850 should hold, you think?
See, it's difficult to say that whether it will hold or not, because the kind of momentum that we see, chances are that it might actually get broken. But two things. One is that if the Nifty future were to hold about, say, 38.15, 38.10 kind of range, then maybe even if 38.48 for the spot is broken temporarily, there could be a bounce back. But suppose if 38.10 for the Nifty July future gets broken, then I think 37.90 or even 37.48 could be in store. And I concur with Sanjeev that maybe going forward we might actually see 36.40 to about 36.05 kind of range. That would be roughly your 50% calculating from 920 Nifty, that is April 28, 2003 bottom, or 849 of 21st September 2001 bottom. In one case the 50% comes to about 36.40, in another case it is about 36.04. So that would be a very strong support area, and that would be a real test for the long-term bull market. We should not be breaking that 50% mark.
Mehraboon, what is your sense? What is the mood on the street currently? Has some semblance of panic set in currently, or are investors looking at these levels to actually do a bit of bottom fishing?
No, definitely yes, there is a lot of panic now, I would say. I think I always believe that most retail investors enter the market last, and most retail investors sell into the market last. And I think quite a few people are virtually planning to exit the market. In fact, I have not confirmed the news, but a source tells me that a couple of decent brokerage houses have gone across and advised all their clients to sell into the market at any price across the board. Now that, according to me, allow me to state that I have always believed in a simple maxim in life, that when you see blood on the streets, it's the time to buy. And I was always feeling that there are still some optimists left in the market who were saying that maybe over the last 3 days, I have come to the conclusion that there is not a single optimist left in the market. Virtually everybody is now stating that we will fall further. The fact is, all these concerns are for real. Let's be honest about the fact. Things have really taken a change for the worse. The macroeconomics is virtually in a total mess, I would say. We don't know where oil is going. Various estimates are being made. We don't know what is going to happen to the rupee. We don't know what is happening to inflation. We don't know what RBI is going to do next. The fiscal situation possibly is in a little bit worse shape than what it was just about a month ago. And now you are Fitch downgrading India's domestic outlook. All said and done, the flow of negatives are just not stopping. But the fact is, in this type of market, allow me to state, some opportunities definitely emerge. There may be very few, but it will be there. And like 18,000, 19,000, 20,000, 21,000, when this news starts coming in the white pages of the newspapers on the front page, I think that is the time where people have to realize that maybe we are reaching the climax as far as the rise goes. And right now, when the negatives are virtually coming on the front pages of newspapers, I'm talking the white newspapers, not the pink pages, I think possibly we'll be reaching the climax maybe a little earlier than what I was earlier anticipating. I think when there is blood on the streets, it's the time to buy. And right now, there is not a single optimist left in the market. So this too, according to me, are the only positives for the market amidst otherwise gloom which we are seeing all over.
It's a great way to read the sentiment of the markets for sure, Mehraboon. Well, Sanjeev, getting you in on the positive side, if there is any at all, do you see any kind of flattening out of the charts, at least in the IT stocks or say in heavyweights like Reliance, any semblance that we are close to a bottom?
See, what we are seeing, it's right now, if you see, we are in a theoretically in a small uptrend, but there's been a huge volatility. There's been a range between 3850 to 4200, and we are testing the bottom again and again. It doesn't give comfort to any of the market participant to be positive on that, because everybody is feeling it may be broken and we may see a lower level. Where I feel if it holds, then we may be really looking at somewhere around 4330 to 4390 levels in a matter of a month. So, but that level after that, like I feel that again there may be a wave of selling which will take it to a next level. If you see, like in 5200, where we had advised our clients to exit all their positions, after that it's just making a 3-step down, 1 step up. So that kind of formation is a classical bear trend, and if you are looking at it at any rise, you should be exiting all your positions, whether they are in profit or in a loss, until and unless you are confirmed that trend has changed for good. So right now there's no sign for that. If you see like any trend change, the bounce from the bottom is equally sharp. Actually it's faster than the fall, which is not happening. So this is not the final bottom. We are yet to see another bottom, and after the post bottom behavior will decide whether we have seen the bottom for good or not.
Even as you spoke, Sanjeev, the Sensex took a look below the 12,700 mark, now holding on to that level, but only precariously. We'll take a break. We'll come back with our experts and even point out some individual movers and shakers in this market after this break.
Welcome back to Closing Bell. Not a good day at all for the markets. Currently, we are trading below that 3,900 mark. We seem to be wedged below that level. No semblance of a bounce back yet. The breadth only worsens currently, inching into that 1:8 mark. Cues from Europe remain pretty negative. CAC, DAX and FTSE are currently trading in the red. We're still joined by our guests, Mehraboon Irani and Rajat Bose are still with us. Mehraboon, what is your sense on the private banking space now after the major sell-off we've seen post-Axis' results? Are the concerns overdone, and have we actually finally hit some semblance of fair value? Where are you sensing opportunities in this space, if any?
Well, I had gone on record to state this, I think, more than 3 months ago, that I am negative on the banking sector, be it public or private, especially public, very negative. And I said the concerns are for real, number one. Number two is not many of us are able to understand one thing as to how much further this rot will continue. Number three is, while they may look attractive in terms of simple parameters like price to book value and other things, the fact of the case is we'll be around the same ratios, even possibly a month, 2 months, 3 months later, and people will just wonder as to what is happening to the portfolio. I think unfortunately many of us buy a stock just because the stock has come sharply down without realizing that stock deserves to come down and has deservedly come down. I think I remain negative. Yes, it's true that in terms of some of the traditional parameters by which we value banking stocks, some of them may look very, very interesting, very, very appealing, and possibly may induce some people to go ahead and buy. But I think these concerns are going to stay for quite some time to come. And I think if I have to take a shot at any private bank today, the only thing which really appeals to me is HDFC Bank, which are around 900, 910, and after the sharp beating of about 11% which the stock has taken today, I personally feel there is value in this particular stock, because we have tracked the stock a little bit closely. I'm quite confident the company will grow at least 25% of the current year at the earnings at which it is, and taking other parameters into account. I personally feel there is value in HDFC Bank, while I don't want to comment anything positive on the entire private banking sector otherwise.
Okay.
Okay, ladies and gentlemen, stay with us. We'll switch over to movers and shakers while the market... Welcome back. Closing in on the lowest point of the day currently. We just got some flashes when we went into the break. Bank of Maharashtra is planning to raise about 400 crores when FPO and the government is planning to dilute about 15% stake. Not the best of times, Lata.
Oh, it doesn't look like it.